Everybody, welcome to September 4th, 225 Principal Profit Trader Coaching Call. We're going to share the screen and get right into it. Okay, so we had this much data. We can go into larger time frame ideas, but we'll just get into what we would use as day traders. That's the daily call. Then I'll get into some things that investors would use. But obviously, an investor would not want to do any kind of reloading right here, right? So the context was such is that we've been since we made this wide double top August 14th, and we've had 5-6 leg counts up. We've moved up pretty much almost 50 to 70% of the range that it broke from. It's close enough to the 100% range principle with this double top. Then on top of it, we had the bearish engulfing confirmation candle, where like any pop up into this would be a short setup, and pretty much that's when I decided to take, I think, half off for the portfolio. I have to go back and exactly. That's when I decided to do that. And you can see since August 15th, that's more than 2 weeks, we've had multiple weeks of a downtrend where pretty much, most resistance zones are being held, and you have to get pretty good support to get a pop. But overall, the trend has been down. Right. So this, if you just look at candlestick patterns and you say, oh my God, the last 3 days we broke out, you're not taking into the consideration all the other stuff that I just mentioned, the leg count, the double top, how we're exhausted and so on. So with that in mind, right, was this, we knew that once we came down at least to here, right, we launched out of that, right? This is a strong area of support. We call that a launching point of directional conviction. At the same time, right? Just because all of a sudden it broke down there, right? The amateur trader's like, oh my God, now it has to be green. No, we were in a down market. Now we might go sideways for a bit, at best, this area, right? I mean, it's not like it's this key swing low, which then would be in confluence with this high volume node here. Just to show you right there. So, right? After we get a trend down day, right, we had this balanced breakout pattern, but at the same time, we're at this area where we could have problems, right? So usually after a day of a downtrend, right, you're going to have some kind of congestion, right? And that's what we got. So are we going to bottom build here, right? This is when we kind of need to back off and make an uncertain call. If we go beauty principle, right, around this area, we went sideways. So that's what I was expecting here, right? We did. Now, at this stage, right, we had 1, 2, 3 days, right? That's the minimum requirement for the mature balance category, which would add a probability for a trend day, right? And on top of it, right, the next day we knew had market moving news, right? And then as it started to break, right, we got the trend. But at the same time, right, even though we know that there's principles to dog leash this way, there's also principles to dog leash here. And I also drew this really strong bull bear zone here, right? This was the bull bear zone that we went long here and caught profits. We made great profits there. It was the breakout spot. It touches this key swing high, right? So it's something that I'm noticing, right? And it's really right. It's basically what I'm doing by drawing that is that I'm honoring the fact that we have a sideways pattern up here, right? This is, I don't know why my box can't get to that, but right, we have a sideways pattern, and now we're coming up to test that sideways pattern on first test in the context of like, this is a pretty strong launching point of directional conviction. And what really made me doubt the momentum on this, even though we had really high intraday momentum, was that we had this inverse zero line reject here. This is not what you want to see, for a potential breakout, notwithstanding the fact that we're only like pretty much, you can this is up for interpretation. You say this is 1 leg, 2, 3 legs down, right? We're not really in that, I might have been counting this as a leg. It doesn't matter, 3 to 4. You're not really like on that 5, 6, 7 level yet, where you're like, okay. What I would like to see happen is that what I was imagining when I was talking about all those bearish things yesterday, right? When it was like this, was I'm imagining another break flash. I would like to see a flash crash that would touch this, and maybe by the time it does that, the 200's a little closer, and we get like kind of a touch or near it, right? And then we get like a buying tail. That would be that kind of washout candle that we need. Otherwise, this intermediate term downtrend coming into late summer is trickling really strong on us. So we have to be mindful of that. So we had not only we had an inverse zero line reject, we know the system rule that when we define this as a bull bear zone, right, it's an automatic short. So if you're long, right, that's a selling point. It's something strong. Now, also like this zone here, which I don't have drawn, is fairly strong as well, right? But you have to remember, at this point in time when we broke up here, you can't just say, oh, well, we're going to go up there again. I mean, look at the different contexts. Like this had been maturing now for, multiple months. It's a huge balance, right? This is 3 days, right? This is like months. So then we got the volatility contraction here, right? And then we weren't getting these bearish engulfing climaxes. We were getting, this is the type of price action you want near a major resistance zone when you're anticipating a bounce breakout pattern because of its maturity and so on and so forth, right? We also had a really strong zero line reject here, right? Which indicated that. And then every time it came back down when it was creeping up here, we had a nice zero line reject as well. Also, notice everything is green up here for a buy. We're still red. Not many people ever really consider that with the CCI, but you should. And, on top of it, we didn't really close on strength. This is like a spinning top. It's like nothing. It's not giving me much, right? And it hit the bull bear zone. And we had the 20 moving average that we haven't touched till here. When it, actually, that's not true. We touched it here a couple other times, but it's something that I'm noting. And then the inverse zero line reject, that's enough for me. Bull bear zone, super strong, inverse zero line reject, 20 moving average. Yeah, that's enough for me to say, hey, I wish this thing's going up, but I'm not hopeful. Now, this isn't some huge engulfing pattern, but we don't have much here to say that this momentum stopped yet. At the same time, you could say that this is a shoulder, this is a head, and that's a shoulder, an inverse head and shoulders. It's still a smaller pattern than this overall balanced breakdown pattern. We still have to see how this matures here, right? I really would like to see one more washout candle down into this zone. I don't know if we'll get it, but that would be a really awesome kind of automatic long. We haven't touched the 200 really at a dog's age, right? It'd be nice if we could get a little bit of that. So that's kind of what alerted us to the heads up. Now, because I called the trade plan right doesn't mean that I was able to give my time, energy, and life commitment to sit at the screen at that moment and execute, which is a whole other thing, right? Market analysts is hard enough. Those guys don't execute trades. They're not traders. They just analyze the market. So I even mentioned yesterday, I was like kind of telling people, like, if I wasn't deathly sick, I would have shorted this. And I'm thinking I should have just shorted this. I just didn't have the energy to just focus on this and maintain a loss. I basically couldn't generate an optimal state of being or mind in order to actually take that short, but at least I alerted you guys and had this bull bear zone yellow, which corresponds exactly to this one here, the daily drawn, right? You just go back in time and look at kind of what it's doing, right? I mean, technically it could be wider, but I wanted it to be actionable, right? This has a lot of touch points, right? And I even drew a zone up here. This is a key swing high. So, right, shorting this was such a good short. And even if you waited to the daily call, right, and you saw this pop up here, I mean, that's close enough where you should short around here. You put your stop a little bit beyond this, right? Now, you don't want way up here, right? Because way up there, right, if we got in around, 11.9 something, we want like 1,000. If you just move the decimal point two places back, that's just a rough estimate. That's basically about 1%. That's what I really would like to get under. You know what I mean? 1.5 is my max. So if I have it up here, it's just too wide of a stop. I have to get too much out of it. I'd rather break it up into a small thing here, get stopped out. We'll see how it happens up here, and then I would take it again, kind of a thing. But what was, notice that here was a little bit more. If you took this on first test, you have momentum against you. You don't have that wide double top. The bulls are in control of the day, and it's at 9 o'clock in the morning. That's just not a good time to short, even though it's more of a point of relief. And I think I might have even made mistakes and took some of these or something. I don't even know what I was doing, knowing that the bias was in control, right? However, the next day, this doesn't have the same kind of momentum, right? This had sustained momentum, and it had a strong intraday bias. Now, the bias was still bullish up here, but I wouldn't argue the sustained momentum was against you like it was here. Now, also, right, this was, right, at this point in time, right, early in the morning, we had such a strong move up. We know statistically, odds are that the higher the low is made in the first hour of the day, 60, 70% of the time. So with such a strong move up, I wasn't thinking, man, I can't wait to fade this as a low of the day double bottom. I thought that the low was in. So that's another reason why you shouldn't short, even if you got this crap here. I think I got out like around here, but really I said my target was the VWAP. Fine, but why would you go against that? And really, the VWAP might have been a continuation. Anyway, the real trade that I told people to take that I didn't take because I was on a damn boat ride was this double bottom, right? I shorted this, took risk off here, took another 25, and then runner hit. Not a bad trade. My original trade was my half off point was here. Okay. I psychologically couldn't hold through this, even though the system told me my half off point was here. I could go all out and then go long again, is what I was imagining. And this was such an easy trade to take. You have 1, 2, 3, you have all these days confluence, right? I planned it out ahead of time. It's at a huge key swing low that launched us out of here. I mean, this was such a good freaking trade. I'm so pissed I didn't take this. And then I wouldn't have been interested in taking some shitty shorts up here because I would have had a runner, and that's it. And that's so I had to tell. So what I wrote in my journal was even if you plan the right trade out and you don't execute it. I mean, who would have thought we would have went all the way down here at around 6 o'clock? I was hoping maybe later in the day when I got back I'd get it. Right. And then the next day, this was around 8. I said, wow, this could work here. But I mean, the validation points here, such a hard trade to take. I mean, that was beautiful. Class A trade where, you would take half off somewhere around here. Right. And then you just hold your runner through that next target next. I mean, it's so easy to plan this out ahead of time. I'm telling you, sitting through this shit is stressful. And that's why I didn't short up here because I was so stressed out. I just couldn't take any more stress. But that was such a nice trade. I mean, it was planned out easy. So, yeah, I mean, this was the real Class A on the long side. I had these zones necessarily for targets, but notice I had this yellow for the short side because, I'm in a situation where, like I said before, the larger time frame bias has been bearish, but now I'm not 100% sure it's bearish, right? I don't know who's in control. I think I'm neutral. I'm uncertain because it has been very bearish, but because of this leg count potentially exhausted, not crazy exhausted, and that we broke above the trend line and it's neutral to me. So I'm open to longs and shorts. At the same time, I mean, if you take, why take every, this was a double bottom, right? I was telling people not to take it, right? The intraday bias was against me. The sustained momentum. This is not a sideways looking day. It's looking like a trend day, right? And you have to say to yourself, like, it's early enough in the morning where it could get another leg down. It's not like this is happening at 9 o'clock at night, 8 o'clock at night, and it's getting exhausted. Terrible looking 15-minute double bottom. It's actually on the hour, but maybe back in the day I would have took that. I didn't care. This little pop got me excited. I said, no, this is stupid. I don't care about that. Right now, when it hit my first zone here, I was like, man, maybe it'll work. Nah, it's still not enough for me. And then we kind of trickled. Right. And then we got something to the VWAP. Like if you were ever going to really go against a day where there's a lot of things against you, you really have to have the patience to wait to the back of the zone. Not the front of the zone like I wanted to do. This is the part of the system that's very hard. Like when you have a lot of things against you, the intraday bias and sustained momentum, I mean, I wouldn't even necessarily recommend fading against this. It looks like a trend day. But you're not getting trend day volume, and there wasn't a lot of pre-market factors for a trend other than you hit a bull bear zone, which can lead to a trend day. And the other markets were a lot more bearish. But we know that, they have higher beta ratios, so they're going to be more bearish than Bitcoin. That being said, it was a totally correct process for you not to take this trade. I'm just saying, if you wait for the back of the zone, even when you're in a bad trade, you still have a better shot at it. And many times it is the back of the zone. Like, let's say you just got really excited and you wanted to fade a double bottom and you consider this a double bottom, right? Instead of just having the maturity to wait. All right, maybe you got it up here. fine. As long as your stop is beyond that green zone at some point, you made money. Did you psychologically really want to sit through all that? That's brutal. Boom, boom, boom. And on top of it, if you got bad trade location and you moved your stop to break even, this would have stopped you out. But if you waited, even to that, towards the back of the zone, right? You still would have got in. This is all hindsight, but just, there's that rule that I've been writing quite frequently. On zone fade for tradable reaction setups, you have to wait to the middle to the back of the zone. That's a rule that's very hard for me to follow. But I went back and I back tested. I'm like, man, this is not securing me good trade location. I need to have a process for improvement in order to highlight this. And basically, it's just I am getting. What's my process for improvement? I'm showing up every day. I'm observing the fact that I need to be more conscious, and I'm actually being more patient. Uh, I'm not jonesing that I missed this and then getting long here, trying to get into something mediocre like I did this day. I just learned from it. I said, here was the Class A trade. Pretty much, I can't trade right now to perform, but maybe someone else can. That's fine, right? And you can just see how these zones work. They're really based on market structure. Notice that you'll know when you're drawing good zones when they break, they flip roles. I'm not saying that every zone fade is a good trade for a sideways daily call. I'm just saying you can see how your zones are working well for you. Like double top wasn't really shallow in the bias. I wasn't super hyped that this was going to reverse here. That's why I highlighted this. The idea was that if it got there, then get aggressive. Here, skip this. Like I said, intraday bias up, not a lot of things going for you, right? The next day, really early at 1 in the morning, right? We got this pop. And we got a strong move into it. We know, this is also a major hook from extremes on the hour into that zone, right? And it had hours to top build. Let's go on the 15, really, just see what that looked like, right? That's when I kind of was telling people, hey, it pops up into yellow. That's, it's go time because you could technically even finance into this zone if you were super conservative. But if you had the guts to just hold these things to real better targets, you will get more out of it, right? And technically, since we kind of traded around this, and here my zone, just to show you how I do zone update, this zone's now invalidated. I'm just gonna move it. Yeah, I'm aware this is the high of the day. That's still technically a zone. And if you really wanted to, you could put a little one there. With the idea that, hey, that yellow zone's still fair game, right? Like this zone, so it's like if we get back up here and it's this wide top building again, and it's not happening at the yellow, but it's happening at the green, you can jump in at green because it's close enough to the bull bear zone. That's the logic. Why? Because like I said, I mentioned these key reference areas, launching points of directional convictions, high volume nodes, the highs and lows of range extremes of large trading balances, key swing highs or lows, buying and selling tails, right? These are the patterns that I look for to make these zones. But also, it's today's high, yesterday's high or low, and today's high or low. So those are the first key reference areas. Would just be the high or the low of the day, right? So I'm definitely going to redraw that. But once the zone's invalidated, we trade around it. Just get rid of it. It's no longer useful. So now that we kind of got over we went over the context for the traders for this trading day. Like I said, if you didn't short last night, really wasn't much to do. That's fine. The good thing is to have the awareness through the observer effect that you missed the trade, you called it right, so that even though you don't execute it, you're going to want to do something to make up for it, which usually ends up in a bad trade and a losing trade, which is even worse. So doing nothing after you miss something great because there was a missed opportunity that you might have called ahead of time because of execution here, you just have to walk away. And that's what you got to do. So now that we got that covered, we're going to zoom out. I did mention that if this closes below the megaphone pattern, we have to hold this low. But we're getting a little bit of reaction here. We'll see how we close tonight. Just to clean this up. Clean this up a little bit. And this megaphone's kind of done now. Let's just get rid of it. You know what? I'll keep it for now. Go out a little bit here on the weekly. Okay. So using beauty principle, right? And shoulder, there's a head we broke down hard into. Well, not really. We didn't hit the blue moving average yet. That's another reason I drew this is that we could get another shoulder here in a sideways market. It would be nice if when we got around the Bitcoin time cycle node, which remember when I called the double bottom here, the breakout here. I mean, it just works very well. The breakout here, right? It's an idea of a time cycle that's generally been useful. If we can get some sideways action then here and then a breakout, right? Remember, this is a head and shoulders pattern, which if you looked at this in isolation, this is bearish. So it would actually be indicating a breakdown at this time, which does suck, right? But I'm only using it right now to say it can build structure here to form this because what I'm seeing, even though this is just imagine the size of this visually, right? And I did draw this in the channel for everybody, but I got rid of it because it's ugly. You got the shoulder, you got the head, and you got this other shoulder. But you have forming a bigger shoulder, a much bigger head, and a huge shoulder here. So while this is like the head and shoulders pattern, right? That's the head, that's the shoulder. This guy's upside down, so he's the inverse head and shoulder. The head and shoulder is bearish. The inverse head and shoulder is bullish, and it's bigger, right? The bullish pattern is bigger than the bearish pattern, and I always bet on the bigger pattern. So we got that going for us, despite, seeing some struggles. But, if you just look at this, just look at how Bitcoin moves, right? Steep up markets, thrust, correction. Thrust, larger correction, right? Why larger correction? Multiple leg counts up and near all-time highs. But building sideways structure was pretty great, right? Huge bounce, broke from it, right? Great reload on April 7th of this year, right? For a huge reload into the portfolio. What a great move if you caught that. We did mention that in the channel live. And what helped me time that was double bottom and this beautiful time cycle node that Kobe deduced. And we also had a nice, really extreme looking pronounced hook from extremes, right? Where both the CCI and the turbo, the blue and the yellow, are way over the 200. That's nice, okay? Now, you might say, well, Matt, isn't this, we're bottom building here, there's a yellow thing here, and we have, some separation here. Isn't that a zero line reject? I'm aware of it, and I'm not surprised that we paused. But just notice the last time that we had a zero line reject, right here, which is a much more bullish overall context because we're actually at a lower price. We're kind of been going sideways, and we're not that extra leg count up. And the blue moving average is calling us, right? And on top of it, this is a really pronounced zero line reject, right? Where the CCI can't even get over this zero line, but it's close enough. And the turbo is super extreme, like way over where minus 100. It's near minus. It's like almost a hook from extremes, but it's not because the yellow line can't get over this purple, right? But this one it did. So it's like I'm not as excited about it. Okay, and I'm also taking into consideration the phase of the market, where we are. Typically, we know that 18 months from the halving is typically when we do see altcoins start to move. That's just historical, and it's a simplistic way of looking at it, but it is in alignment with this Bitcoin time cycle chart in October because 18 months ago was the halving, the 2024 halving in April. So this is our 18 months this October, right? Now I'm just going to zoom out on an even larger time frame as we wind down here. I mean, just look at this, right? I mean, do these two candlesticks not kind of look like these two candlesticks in a sense? And then we have pretty strong drop off. Remember, when we dropped off here, we were right near the top of this bounce breakout spot. There really isn't a lot. I mean, where is the real high volume node? It's here, which would take us down to about 96 to 100K. And no one wants to talk about that, but be alert. If it does happen, be on guard for it, man. It could happen before October and then start to reload. Think about patterns to reload because, if we clone this giant balance, right? In fact, let's just do a mini fractal to show you how well this can work, right? I mean, it's not 100%, but once we broke 100% of this range, right, this is when like you're not really going to go much higher. Then you go back down to it and there's problems. Like I said, it's not perfect, but let's just see what this looks like on a larger fractal. I clone this and I clone that. And it got pretty close, like 124 to 132. This is when you have to ask yourself, is it worth holding to get $8,000 more for my target? Like you have to do a risk reward ratio on your exits. And the answer is no. It's not worth holding for a little bit more. If you were up here to hold to here around for a potential huge downside risk, in my opinion. That's why we're half off in the portfolio right now in sweet Bitcoin and Ethereum. And then that half off point, I'm very free to reload it. I'm not all out because, there is the quad exit, and I'm not going to dishonor that because I don't know the future. By having at least half off, I have profits, I have my stops to break even, but I'm also honoring the possibility that this thing eventually can get really bullish in October, and I don't have to try to reload the whole thing. I can just try to reload half of it if I want, and if things get pretty scary and bad, I have half off in profits, and I capture those, and we'll see what happens. I mean, that's the best we can do. The ways other folks make money in markets, like Rick Schmitz of LTO, I guess he's kind of famous in the Netherlands, is he'll use his connections and hype to generate this energy, and then he'll get certain connections because he's related to royalty to the United Nations and to his own government, and then use that money to buy old companies and party with Conor McGregor, and then take his coin down to zero. He was lying to everyone the whole time, and now he's got people that want to sue him, including me. So we can be that type of scumbag and rob people of markets because the markets are simply, in some sense, if they're backed by nothing, it is player versus player. And that's just it. There really is not. And many times I had an opportunity to get out of that, but because I fell in love with these promises that you never manifest. You see, there's no truth in anyone's word. There's truth in the words that I post at PPT because the principles are archetypal and they all transcend my own self, right? They transcend the folks that I've learned them from. They are universal truths that you can see that are applicable. Yes, some of them we've developed ourselves, but you can see how these are basic principles that in general will work over a large sample size of trades. And that's really the best you can do unless you want to be a market manipulator. But if you want to be a market manipulator, you have to also reap the consequences of that because saying bank, they don't always get away with it, right? So, yeah, I mean, I'm not excited about this because we hit this and we have a little pause here, right? We'll see how this develops, right? But time cycle coming up, beauty principle maturity. We have a bigger pattern here than this pattern, which I don't see anyone really talking about pattern versus pattern, but me here at PPT. And, but being on the right course, we'll be alerted. Now, everyone thinks in the fourth quarter we have to have a crazy alt season. I'm not thinking that way. I'm not speculating. I'm very going to be much alert to following principles and taking profits and not thinking, oh my God, we have to keep holding. If this does get some strength and we're up here, I'm already going to be quad exit. I don't care that some of the other views that I occasionally share, maybe I even shouldn't, are saying we're going to go much higher, like the psychic lady, whatever her name is, and a couple of fundamentalists that I posted for other views. 100% range principle, I'm taking profit. If it starts to have problems in this upper quadrant, I'm not going to be so rigid where I have to wait. This game is not a game of perfect. I just want everybody in January, when there's opportunities to be in the green, to capture profits, make money, and feel and be a winner. Right? You don't want to be the guy that's waiting for the thing that'll never happen and sitting on your hands. I've been that guy. Don't be that guy. right? This is the portfolio top. Obviously, for the income producing day trades and swing trades, everything is an anti-martingale fixed percent risk model. We don't even question that. There's never been a time I'm running my stop on my trades. Portfolio, horrible decisions. I've made some horrible decisions investing in some coins because I think, for the most part, believing in somebody's word and fundamental analysis is a lot of bullshit, in my opinion. So I'm not saying that we can't find the right one. That's where the diversification comes in, but I'm just feeling a little jaded lately about the whole alts in general. Except for, there's been one altcoin that's been profitable despite one, and that's been SWE. So I have to say that PPT did identify, that darling of a coin. But I mean, what other coin really is there that's like this? It's an altcoin. Um, I'm sure there's a couple other, but I don't own any of them. There's Ripple and maybe Solana. I'd have to look at those, but I didn't go with those. I'm in every coin here I own. That's the shitty. That some of them are complete trash and some of them are great. So LCX just got some kind of an ETF launch. I'm sorry, not LCX. Say, right? So I'm optimistic about this one just from a reload perspective because just as March of 2024, we were much higher, over $1. So that's not a bad bet. You get an ETF coming, you're at a low price, you put in something you can afford to lose. You're an investor. Fine. I'm okay with that. In fact, this is not even a bad spot. I might even give an investor. Actually, you know what? When we hang up here, I might give an. I'm not gonna. I don't. I actually do have some money to reload because I'm half off. I might reload more into this. I'll let you guys know if I give a signal. I mean, just look at this launching point, bottom building, bottom building. We built a balance. We broke above it, bottom building, and we broke a balance, and we got a zero line reject, and we have a little moving average here, and we got some support. This is nice. So I might actually do that. See, one of the things that, this is where the fundamentalists come in. That say ETF launch is nice, but it's like fundamentally, I just don't know. Like the chart looks good, but like with main markets like Bitcoin or the S&P 500, like there's so much liquidity in the market that you have a little bit more faith in the principles. But that being said, I mean the principles are working on every single. I mean, remember SWE with the beauty principle that I showed? Not on the weekly, but on the daily. I mean, that you can just see how that works very nicely. And I did kind of want to reload here for the portfolio, but part of me just felt like because of what was up ahead and the timing of the summer and this huge momentum sweep, I didn't want to get in, even though this was a nice spot. So, the larger the market cap, I would say the better the principles apply. I'll just give you an example of a coin here. I mean, there really isn't a chart that we can do much with, right? You know what I mean? So just to give you an example of some of these lower micros, there's really nothing. I mean, that's another one. It's like you'd be, if it gets, what really pumped this coin to $56 was those parachain options. So it kind of needs these businesses to get back involved. I don't know when this is all going to resemble 2020. There's always a party that feels like it'll never happen, but it's happened after every 4 years. So if previous market behavior influences future market behavior, it should happen again. Although this is what I think is going to happen because there's been so much bloodshed and lies and scams that the utility factor is going to wipe out a lot of trash, which it already has for me, like LTO. It's completely wiped out, $55,000 down the drain. And that utility is actually possibly even going to make me more. I know it's tough to say. I just lost 55 on this one coin, $5,000 on Lime, 15 grand on Proton. In the end, if the utility weeds out the crappy altcoins, and then there's like things like SWE left over, and it'll make all up for it. So I'm all up for this .com weeding out, and maybe we got the right one, and maybe SWE gets to $56, and I don't give a shit about Polkadot or whatever. Although I think Polkadot is obviously a little bit safer than LTO. Polkadot was created by Gavin Wood, co-founder of Ethereum. So anyway. Dot was kind of like the darling of the last full run because of its interoperability. It got really into the top 10, 20 at one point. Had Gavin Wood, and it was one of my biggest winners. I was pretty happy about it. But to see it go from 56 down to 3, you'd never think of the time that it ever will. Think it. It will. Don't love these coins. Everybody that's in the green wants to take your money. You have to actually be almost like psychologically fearful of other people taking your money and competitive about it. Like, I don't want people taking my lunch today. I'm going to school. You're going to get your own lunch today, pal. Because that's the name of the game. I'm not going to let these guys take our lunch. I mean, what a disappointing alt season, right? But right, October 23, we had this. Like, we're all looking for this, but out of this, this just looks like absolute trash. This was a wide balance. I'm not really going to even get into these charts. I've invested in these coins. I'm using Bitcoin dominance to time a lot of this alt season stuff, right? I mean, it's just alts had a little run when we went to this intermediate term downtrend. Now, when we broke below this, I'm glad that we broke below this because this retest, right? I want this to be bearish, right? Even though Bitcoin still can go up, it won't go up as much. I really want, but part of me just feels that, even though there's this death cross and things like that, that we could just, it's been so bullish, right? I just lower my resist support a little bit. I mean, we could just form another box here, go up here, and then test what I would consider alt season scenario 2 higher odds, which is a little bit, this is that fib ratio I have, whatever. It's just up here, you know what I mean? Really strong alt season at a 73% market cap dom, where everyone's so happy now they're going to just be taking profits. So that will remain to be seen, but that's the conclusion for the market analysis. If Tim, if you got any questions, floor is yours, my friend.
Oh, there's a few percolating. Mostly, mostly just trying to follow what you're saying.
Did it make sense? Was there any questions you had?
Well, if you could touch back on, so you drew a bullish head and shoulders and a bearish head and shoulders on the Bitcoin chart, and you said your money was on the bigger pattern, which was the inverse pattern for the bullish head and shoulders.
Correct.
Could you maybe explain that a little bit more?
Sure. Yeah. And just to clarify, doesn't mean I'm think that that is a good bet now. What I would like to see happen and could happen is, like, if we clone this based on this beauty, how price behaved around here, and because this is a shoulder, and because we're so many leg counts up, we hit this trend line. We do have this head here, and then we pop below this. We broke below the balance. This could potentially be forming this shoulder, this head, this shoulder, which we know eventually could break, be a bearish pattern and break down. What I think could potentially happen is that if we do form this moving average could, be acting as support. It's in alignment with this inflection point here, which is a change. It doesn't mean up or down necessarily. It means there's going to be a directional phase shift. But the reason why I'm betting on the bullish side around there and not betting on this bearish head and shoulders is because there's actually a bigger inverse head and shoulders than the normal head and shoulders that's bearish. This inverse, I'll just draw it real quick. Right, we talked about the head and the shoulder on the downside, which could take us here, right? But what about this shoulder? What about this head that's upside down? And if we do get this, just imagine what this looks like. It kind of looks like a bigger version of this, right? Where it's like boom, boom, boom. And when we get that, right, that is a inverse head and shoulders, right? Just to show you what it might look like. Oop. You see how there's a shoulder here, there's a head that's upside down, he's being shaken, there's another shoulder. That's an inverse head and shoulders in the context of like 5 legs, 6 legs counts down. And look, we got a nut, and then it was, remember, markets go down, then sideways. This is a weekly chart, and then we went up, right? Because we had shoulder, shoulder, and then when it went up, it formed another shoulder. So when it came back here, this is what I'm envisioning. Like, if this hammer candle, after this matures, happens like the week of October 20th, and it's around here, and maybe around this blue, man, I'm loading up. I'll reload the portfolio. I'll go all in. I'll be trading aggressively long instead of this neutral bearish, larger time frame bias type of thing I've been in. And if we do that, right, I mean, just visually on the chart, this pattern is, bigger visually than this little one up here. So if you just go pattern versus pattern, eventually the bigger pattern probabilistically tends to play out. Is that making sense?
Yeah, no, it does now. So thank you for explaining that again. So the bigger pattern is that inverse head and shoulders.
Correct. And you know what? I mean, I know you have the every student member has the basic template of the daily call, and I know that every trader, a lot of people come in with their own training. Like for example, I know you use tools I don't, like MACDs and things. There's a guy in the room that uses the Ishimoto Cloud. That's all fine and well. A lot of those are lower time frame things. Just remember, just add those. You can just add those categories to your daily call setup, and yeah, I mean, so I guess what I'm trying to get at is that one of the things that I've done in that vein is that I have other types of training before I got into the daily call Kobe system that I had to incorporate because I just could not see them, and they added edge to me. Kobe's daily call isn't 12 things; he's got a lot more things. He uses stochastics and everything, but make no mistake about it, that 12 template daily call is all you need. You know, I just see these other things because it's the way they've been trained, and I'm good enough where I know it adds an edge. So the category that I've described here with this pattern versus pattern, which you could add to your daily call, and I think I've mentioned in the channel a couple times to do so, is called bigger picture patterns, right? And if the bigger picture pattern is on your side, that's just another edge that the bulls would get because it could make like your daily call sideways to up or something like that. And just keep in mind that the bigger picture pattern it takes time to mature. So in other words, like this yellow box hasn't manifested yet. So I don't know whether, this regular head and shoulders is going to happen or the inverse one will happen. I think it will. I think that first the bearish one's going to happen, and it's going to take us sideways to down to this lower box, and it's going to look something like this. But instead of a breakdown, I'm hoping that this larger inverse bigger picture pattern can then neutralize the smaller one above it in conjunction with that time cycle where things tend to get bullish. That would be ideal, so that we always, as traders, when we're doing our, daily calls, our flow charts, is, we want to think in terms of scenarios, if then statements, nimble in our thinking. I mean, what if I'm just totally wrong and somebody puts in the craziest order and all of a sudden we get this V recovery? And we pop back into this balance way sharper than I anticipated. Well, then my whole thing that I just talked about is invalidated at that moment in time. But that's okay because I'm not trying to be right. Like everybody else we're always trying to be right. We're literally trying to make money without having to be right, just by being nimble in the thinking and following this system, which is a probability, not a prediction. And then the risk reward ratio comes in where you can make an educated target, an educated stop, and then find a reasonable entry based on those two things first to get the risk reward ratio in place. Because a lot of trades just don't have good risk reward ratios, and you should stay out of them. So, yeah, that's
No, that
kind of
makes sense.
yeah.
So, following the probable model, right now we're looking at a much larger time frame. So if I were to break this down to like a 6 month time frame or a 3 month time frame and start seeing, the same pattern of, inverse head and shoulders that then forms regular head and shoulders, that would become part of like a beauty principle, right?
Correct. Yeah, I'm to predict the bigger picture patterns, I'm using, stuff that Kobe's. See, my system that I'm teaching now is like a synthesis of it all. So I'm using the beauty principle here to imagine how price is going to behave the next, up until, 3, 4, 5, even 6 weeks up until October 20th. Right. And not maybe 6 weeks, 5 weeks, 4 to 5 weeks. And, that's helping me imagine, okay, well, if that beauty principle happens, because that's how price behaved here, kind of went sideways here, dog leash, we haven't touched this. Like maybe this will form that, also that's in alignment with this, what looks like a potential head and shoulders. Now, somebody might see that, and there's people in my LTO channel that I'm in for that coin that went downhill. That everyone's talking about what to do about it. And there was a guy that said, I don't even think Bitcoin's going to get ... We're going to even have a strong Bitcoin year, let alone alts, whatever. And he's and that's because he's looking at this top, And maybe he sees this pattern, but he's not comparing patterns. So, but if price gets down to 100K, there's going to be people that are going to be buying that. There's no doubt about it. I mean, it just was at 124, so that's at a discount for people. And, if you want to think about it that way, in social market terms, you know, it kind of, so the whole idea of thinking about social market terms, like pretty much everything besides maybe beauty principle and some more trickier contextual elements is pretty measurable and objective. Are they near a moving average or are we not, for dog leash? What's the average true range? That's just an objective thing. And, there's certain categories that are, how you feel about it or how your gut feels about it. And that's that, how do I feel about being short and how do I feel about being long? And I just, I haven't felt good about either one right now. And that's okay. You can honor that, there's nothing wrong with making these uncertain calls. I think uncertain is the most important daily call. Because, when the opportunity cycle is there, we can really press into these. But how many people, they maximize an opportunity cycle and they just give it back because they don't realize now that the opportunity cycle has shifted. And that's, in addition to the bigger picture pattern category, that's why I've also added and constantly talk about multiple time frame analysis, which you can go on Investopedia and they talk about it. Not necessarily the way I do, but it's, it's its own thing. So you see how I'm coming in with, Ichimoto, my version of my Ichimoto or MACDs or whatever. And the multiple time frame analysis is just making you aware of 4 different time frames. Even though there's infinite time frames, I have to have 4 manageable time frames, which is the intraday bias, who's in control of the day, which even though that's not a daily call pre-market thing, it's definitely something that I use to decide whether to execute on a daily call setup because, the intraday bias is super important. I mean, I wasn't super excited to go long today because other markets and the bears were in control. That's the intraday bias. Other markets is another category that's not part of the multiple time frame analysis. But so you have your intraday bias, right? That's just who's in control of the day. Then you have the short-term bias, which is who's in control of the last 1 to 4 days. And then, you have the intermediate term bias, who's in control of the last 1 to 2 weeks or so. Then you have the big picture bias, who's in control of the last 1 to 4 months or so. Now, it's not just time. Remember, I also said it's magnitude of move. So you can have a move that's so big and took out so much data that happened in one day that now your intermediate and your short term, maybe even are all aligned, even though it hasn't been 2 weeks of like a down. Like this is an obvious intermediate term downtrend that ran on the daily, right? Because we can see 1, 2, 3, or even one leg, 2. It's not really leg. Somebody might count that a leg. That's fine. 1, 2, 3, and then 4 at most, right? And right, if you take anything and one thing in isolation, it's just I just think markets are way too complex. Now that being said, it's not like every single day, every single category in our daily call system, right? We talk about multiple time frame analysis, bigger picture patterns, and then the real time ones like sustained momentum and intraday bias, along with trade location. And then, right, what the multiple time frame analysis does, which helps you look on those 4 time frames, big picture, intermediate, short term, and intraday. Excluding the intraday, you look at big picture, short, intermediate, and as long as at least 2 of them are aligned, intermediate and short, or big picture and intermediate, ideally all 3. Then you have this extra edge called time frame alignment, which is even another edge, and then the synthesis of those 3 categories are not necessarily their own individual daily call. The synthesis of the multiple time frame analysis becomes one other category that you can put into your daily call pre-market called larger time frame bias. I know it's confusing because like people think like when I talk about the larger time frame bias, I'm referring to the big picture bias. I'm actually not. The larger time frame bias is taking into consideration all those time frames that I just said of the short, intermediate, and big picture, not the intraday. That's not large. That's in who's in control of the day, but the short, intermediate, and big picture. I synthesize those to see if it's in alignment or not. And then that gives me what the larger time frame bias category is for the daily call. So if there's no alignment, then it's a sideways, neutral. If there's alignment, it's bullish. If there's, it's been bearish lately. Except when it got to a potential area where it could reverse it, and I'm not sure, where I go neutral. Like when it got down to this zone that I had originally drawn, but then lowered, which was like right here. Pretty much this launching point of directional conviction. But I should have just kept that zone in, because look how, sideways, 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 balance breakout. That is, these zones are, people think that, these Wall Street guys have so much more knowledge in this. They really don't. What the Wall Street guys that I'm in contact with have from my fraternity at Chi-Fi have, that the average guy doesn't. And I wrote this down, so let me just, I can memorize it, but I wrote it down what they were saying. Let me see if I can find it. Bear with me one second. So here it is. Okay, so this is what they have we don't. Because as I'm talking with them, they were asking me about all these secrets I know about market internals and the S&P. Like, what's that? What's multiple time frame analysis? What's a daily? They don't even do daily calls, man. I mean, we're doing some pretty advanced stuff that I've had some amazing teachers that I've invested in over the years. Trust me on that. I've paid a lot over the years before I did this with Kobe, before he became my partner, and other guys that are really good that live in Dubai. So I just want to let you know what I was told by some of my fraternity brothers at Cornell when I went to see them in June. They basically said that what they're having at these prop firms is they have the senior traders, kind of like me in the room with you guys, or when Corby was here as well, give rapid feedback loops. Like they don't just fuck up and then like sulk for a while and go away. Like every day they're like getting it's that book called Deliberate Practice. They're literally performing every day with people helping them. And more importantly, that rapid feedback loop is, that constant accountability that they're getting. They're always accountable for what they do. More importantly, what they do is they kind of actually they meet in the morning, and the senior advisors are coming up with the trade plan, giving out the expert guidance. Obviously, everyone's got to go come up with their plan, and they meet, and they talk about, what areas might be good for longs and shorts, what they might do that day. So the senior traders are helping out the younger guys, the newer guys, by essentially giving them the trade plan, like I tell you. Like, for example, last night, I couldn't perform. I was sick. If I had an assistant, I would say, if it got anywhere near that again, you short that with the stop here. I know if I tell somebody to do that, they can just focus on the execution of it. Why is it harder for me to do both? It takes so much mental energy to even come up with the idea in the face of a sea of uncertainty and your emotions and fear to step outside of that. And then you got to be able to do it at any time of the day. So, but the expert guidance is super important, what they get in the morning, and what they're actually getting besides just these team rooms. They're actually getting personal performance coaching. And, that's why I went the extra mile. And not many people have taken me up on this. I mean, we kind of do it a little bit, Tim, because like you come on the call, these coaching calls a lot, but I used to offer these one-on-ones that weren't recorded. Then people could really admit what they're doing. And that's that personal performance coaching that is a factor that's really what's missing in the world of independent trading. There's literally no feedback loops when they make a mistake. That's why I forced myself. I would do stats with my guy sometimes 2, 3, I'm not even kidding, a month ahead of time. I tell Corby, I forgot everything that I did. He's like, why aren't you doing this every day afterwards? I'm like, because I don't want to look at myself. I'm exhausted after I trade. I want to go away. If I feel great, great. If I have a great trade, let's go out and do something fun. I just try to explain to him, even though I created that stat sheet for PPT and I understand everything in it, the expectancy, there was something about me filling in this, and it's such a simple thing. And now I do it, daily, or at least 2 days, 3 days max late. It's always fresh, and I'm telling you, that has been the real difference. And then something that I never did, that I created that journal for you guys, I barely ever followed it myself because it's a pain in the ass to always write all that stuff. Like you think like, oh, I understand it. I'll remember the mistake that I made. Then you realize why you just took five more losers on that one day when you shouldn't have, kind of a thing, right? Write that stuff out. I'm telling you. That's the part that I was resistant to. But I think what made me snap to take my game to the next level is, a lot of these diversified micro cap, stupid buy and hold stuff that I did all went. It's like, well, you know what? That ain't gonna work. Hearing about a guy in the room who put, $100 into flow key and he made 27 grand, and now I want to do that with 100K so I can become super rich and retire. That was a dumb fantasy during euphoria. This is about doing discipline and work every day. And I'm telling you, the work that you do in this game will make you a better person because you have to come to this market with an optimal state of mind. The amount of emotions I had to do this work over the last couple of days when I'm puking my guts out in the morning, I'm trying to get to the market to teach everybody. Then I look and I'm like, oh, that trade would have worked out. Son of a bitch. You know what I mean? And then I'm like, whoa, wait a minute, Matt. I'm I'm feeling everything everyone else does. The fear, the anger, the stress. Then all of a sudden I step out of that. But it's still there. It's almost like, okay, great. I welcome it. It's supposed to feel bad. I've really strengthened that connection to this immaterial aspect of ourselves of the observer. Okay, so then I'm observing myself. I imagine myself in the chair. I imagine myself looking at the screen. I imagine myself getting stressed out and maybe taking too many shorts like I did the other day because I missed the long. But now I'm catching it, right? Because I'm counting this ahead of time. And really, like I said, it takes 5 to 6 more trades. This is from my experience when I was a losing trader. It takes 5 to 6 more trades to tweak your expectancy to a positive expectancy. And then you will go back and go, wow, I didn't FOMO. I was patient. I missed opportunities, but I didn't do something stupid like trade a breakout on a day when I never should have. I waited and I took 5 good trades that I didn't even think would happen, but they did. And now I'm up. And it's like, wow, 5 winners where you get at least 2 to 1 reward to risk. Then you're going to be in a world-class position. People don't understand this. 5 to 6 trades away in a row, maybe even 5 to 10 from switching that 50% hit rate and less than 1-to-1 expectancy into something that's going to generate. Because if you're on that sheet that I gave you, if your expectancy is at 0, great, congratulations, you're breaking even. That's an amazing place to be in. Around 0, slightly above it, slightly below it. I mean, if you ask yourself this, if in the last month and you press the button 50, 60 times in a little over a month, whatever, and you are around break even, that means you're doing something right. Because just imagine baseball. You were getting 50-50, right? And now all you got to do is just tweak it a little bit one way to fix that into something else. And that's like 5 winning more trades away without taking the losers to give it back because you're going to be patient and wait for the right setup. Being totally okay with missing a great opportunity because that's life. Because in your heart of hearts that this market will always provide you with an optimal state of mind. And even if you didn't take that short last night that I didn't take, but I gave the signal for, at least your shit is in tether and you didn't take a loss because you're holding some shit coin. You know what I mean? That's you always really like when you're doing this, right? Once you go into the observer and realize that you're in a negative emotion and negative thought, right? State of being. You go into the NLP. I have 100% control over my thoughts. I'm observing these emotions and I welcome them. And then I just go to the gym and train, do something else. I have some videos that I made about the market where I'm walking to the lake, which I might start doing more of with my dogs and doing them out there. Getting away from the screen, getting away from the blue light. I read an article the other day that blue light makes you fat. I'm telling you, man, I've been wearing blue light glasses. Put on those blue light glasses. Decrease that screen time because if you think that the work is getting in a trade and then wondering if it's going to work out or not, I've been doing that a lot lately, right? Where I get out of something and then it works out, or I get out 2 or 3 half off. Don't do that. You got to set that sucker and forget it. And the way that you do that is to plan out what you're going to do. Like, for example, I've been talking about, I missed that trade the other day on the long side on the triple bottom. Fine. Then I said, hey, go short at the yellow. If you can just not do anything in between, and then no matter what, get ready to do that, even if it's at 8, 9 o'clock at night and you're tired and sick and you want to go to bed and you planned it out ahead of time, then you did the right thing. And that's the level that I got to get at, is that if I plan this out way ahead of time, I'm going to take the trade no matter what. I may even hire a guy to execute for me if I can. I'll just tell him exactly what zone to get into and stuff. So, yeah, that's the name of the game. You can always put in an automatic resting order at a zone as well, which is a whole other level of faith and balls. But trust me, I've compared this before. Oftentimes, when I put that resting order at good trade location at the back of the zone and set it and forget it, I will get a better fill than if I finesse it with my own going in early to market. Same thing with my exits. I have my exits all would have hit. But I like I said, my runner target hit on that short the other day, but which was supposed to trigger the long, and I was supposed to go long, which I missed because I was on that bull ride. But like I said, even if you miss it, there's going to be a lot of other opportunities in the market. Doesn't matter. That's the optimal state of mind that you need to be in, Tim. So you were on it, Tim. I mean, you've been on this for a long time. No other endeavor or craft. This is a craft. Would anyone put in like a decade or so, put in that much time, and then get feedback from everyone around you that, hey man, you're just gambling, or just because you're maybe not at where you want to be in your trading, that it was a waste. Heck no, it's not. It's not the case at all. I will tell you this: these like one of my friends that worked on Wall Street, really really smart guy, Adam Goldsmith. The other guys did pretty well. He's off the charts, but this guy's really brilliant too. He's like, I made some money. I lost some money. I could just see it. When he said I lost some money, he's fucking stressed the fuck out. He's not a trader anymore. He works for the Federal Reserve. Big surprise, right? Anyway, great guys. I don't know if I'm going to ever want to do. I might do that someday, but the stress levels would be off the chart. But it would be a whole other level of gamesmanship. I don't know. It's always good that there's an opportunity. What was really great about it is I went back there and talked about what I was doing with PPT. Showed them the Telegram channel, talking about the strategy. And even though I was asking them questions too, they were asking me more questions about it. This was like over hours we were talking about. This was awesome. So it gave me a whole birth of confidence. But that doesn't mean that the opportunity cycle means I go order trade that. You know what I mean? That this summer is it's been tough. It's been tough in a sense where, I mean, just look at these days. Like, you have huge days that then completely reverse. Not the easiest days to trade, but if you use the system, like I said last night, it helps put you on the right side of the market. So, all right, Tim, man, I might be doing one-on-ones, not this Friday, but next Friday. So hit me out. You are definitely the most dedicated guy in the room. I appreciate it. You're one of the main reasons I still keep doing this, by the way, because it's like I could just trade on my own and it's not growing the way I want it to. And right now I'm in a situation where Israel, even though it's recorded, I don't care, is it's not giving me the data on the website, so I may have to redo all that. Irregardless, right? Appreciate you. I'm going to keep showing up every day, and I'm really excited for this fourth quarter. We'll see what happens. All right, bud.
Yeah, sweet. I'm looking forward to one-on-ones again. That'd be nice.
All right, Tim. Keep at it, brother. See you in the room.
Sweet. Thank you. Appreciate it.
Have a good one.